Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, I want to start off by talking about Bitcoin. It is currently at $67,852, still consolidating, still moving sideways. We saw some weakness from the DXY over the past couple days, but we still have to let it continue to break downwards. But we're seeing a good sign that it is starting to move downwards. So fingers crossed, folks, because if this keeps breaking down, we're going to see a very bullish April, which I think is going to happen. There's a high probability because the halving's coming up. The DXY is starting to break down, and you got some mixed signals coming in from the Fed. For example, the jobs data, which I'm not here to argue if this jobs data is real or not, because I do think the numbers are manipulated a bit. However, this is what's being reported. So if the job market is still hot, then that means the Fed is going to hesitate on cutting. And there was also signals from Jerome Powell saying they might even raise again. I don't think they're going to raise again. I do think they're going to keep the current rate at what it is for a long period. And as I've been stating, and I wrote in my newsletter a couple of months ago, I don't think they're going to cut rates ahead of the election to not show any type of favorability. Plus, markets have tanked when rate cuts took place. This is the data historically, folks. Every time the Fed pivoted and started cutting, it meant something was breaking or something wasn't going right, and then markets took a big dump. So just, it doesn't mean that that's going to repeat exactly, but history, it does rhyme. And I think markets are front running this. And I don't think they're going to cut rates anytime soon. So with all that said, the DXY, I think it will put pressure on the DXY to keep going down. And that's going to be great for risk assets like Bitcoin and crypto. And Bitcoin, on the micro from let's say the hourly and so forth is forming some sort of bullish triangle and flag here where it can break upwards. So things are looking good, guys. Obviously that can change by the day, by the hour, right? Depending on what happens in the market. This is a very volatile market, but we're still on track, folks. Things are looking very bullish and Bitcoin still has ways to go. And if it did what it did last market cycle, where it went to the 3.618, going to that Fibonacci level would put us near $200,000. Now, is that guaranteed? I don't think so. I think we definitely crack 100,000. I think we could definitely see between 140 to 50K. But if it goes higher, that would be beautiful, guys. And we can certainly expect liquidity to start flowing down to the alts and the alts to have an epic alt season and break new all-time highs, of course. So here's what some analysts are saying, like Shardy B here, and don't be confused by the name, guys. These folks put out incredible analysis on stocks and Bitcoin, highlighting where Bitcoin is at right now compared to where it was in 2020 before the final leg up to the run up to new all-time highs. They said, I feel like these two areas are very similar. Both had big runs leading up to the stall. So right now, Bitcoin stall. Both had RSI overbought, then cooled. But what happened after that? A rip up to new all-time highs. Here, another analyst highlighted this great chart going back to 2013, showing where we're at right now. We have tested the all-time highs from 2020 and 2021. The same thing happened in 2017 and 2013 and so forth. We're testing those highs, and then there's usually a stall out at this period, some sort of pullback, and then we rip higher. So the analyst said here, fasten your seatbelts. I'll tell you why. The perfect retest of the 2021 all-time high. In a parabola/uptrend, Bitcoin loves the EMA 10 line. Both have also been important in previous cycles. Just a breather right now. The market will surprise us all so much, in my opinion. And I think he's right here. This looks pretty legit on the charts here, guys. So be patient. It's not guaranteed that this is going to happen, but I would say there's a high probability. Now, let's take a look at the top trending tokens on social media. This data is brought to you by Sentiment. You can check them out. They're one of our partners. where you can get great crypto metrics and insights. So first token that's trending is Solana, and I'm sure many of you have heard about the congestion on the Solana blockchain. That's one of its weaknesses. They have to iron that out. But it has positive sentiment at 52%, but negative sentiment is high at 37%. Bitcoin comes in at number 2, also has high negative sentiment. Positive is at 44, negative is at 40. Then you got number 3, you have ARAW, ARAW, and the ticker symbol is USDE with high positive sentiment. Dog with Hat, a meme coin, comes in at 5 with high positive sentiment. Cardano comes in here at number 6, although its negative sentiment is high. So positive sentiment is at 47% and negative sentiment at 38%. Origin DeFi Governance, OGV, comes in at number 7 with positive sentiment. XRP comes in at number 8 with positive sentiment, and that's probably because of the news we heard of Ripple launching a stablecoin on the XRP ledger. Then you have Origin Protocol, OGN, coming in at 8 with positive sentiment. Then Pendle on Ethereum. So I've not heard of Pendle before, but it has positive sentiment. It's PENDLE. And then PYUSD, the PayPal stablecoin, is trending at number 10 here, surprisingly, with high positive sentiment at 80%. So those are your top 10 trending tokens on social media, folks. And once again, if you want to see more data, check out the sentiment link in the description. Now, big news coming out around BlackRock and their Bitcoin ETF. Goldman Sachs named as authorized participant on the BlackRock Bitcoin ETF. The asset management giant also adds UBS Securities, Citigroup Global Markets, and Citadel Securities, a Thursday regulatory filing indicates. Folks, when I've been telling you all for weeks now that we are still in the first innings of this Bitcoin ETF game, because the RIAs, the wealth managers, are being educated right now. That campaign is happening, right? The marketing is happening. But the big Wall Street firms out there are now starting to list the ETFs, folks. There's so much capital still yet to come into the Bitcoin ETF. So this is incredible. Huge news. And obviously, look, they all trust BlackRock, right? BlackRock is the world's largest wealth manager. So incredible stuff. Authorized participants, or APs, are specialized entities, often large financial institutions that create and redeem shares of an ETF. The shares can typically then be exchanged for a smaller basket of securities reflecting the holdings of the ETF or for cash. This process plays a critical role in ensuring the liquidity and price accuracy of ETF shares in the market. Takeaway: big firms now want a piece of the action and or are now okay being publicly associated with this, Bloomberg intelligence analyst Eric Balchunas said in an X post. Folks, if you're not bullish hearing this, then I don't know what to say, right? And like we just covered at the beginning of the podcast, the charts are aligning to that. So bull markets are fun, and you do have to be patient. There is volatility, but they're fun, guys. We are in an uptrend and more money is going to come into the market. All right, big news, folks. I'm not sure how many of you know about this, but Coinbase was being sued by 2 random Joe Schmoes. I'll give you their names specifically here. Christopher Underwood, Louis Oberlander, and Henry Rodriguez had filed a class action lawsuit against Coinbase Global Incorporated and its CEO, Brian Armstrong, saying that they are an unauthorized securities exchange. It wouldn't surprise me if these 3 jokers are plants by Gary Gensler and the SEC, right? Because who the hell would wake up one day and say, oh, we're going to go sue Coinbase because they have unregistered securities? Don't buy anything on it then, right? It's you're choosing to buy something on there. So it is a bullshit lawsuit. But these things, I believe, are done because somebody put them up to it, right? Whether they're trying to kill the Coinbase business, short the stock, or whatever it may be, it's not good intentions, obviously. Well, folks, here's the big news. There was a ruling on this, and Paul Grewal, chief legal officer at Coinbase, tweeted out, "We appreciate the second court for confirming today what is clear under the federal securities law. There is no private liability for the secondary trading of digital assets on exchanges like Coinbase." Why, he says here? Because contracts matter. And he linked to the full ruling. Folks, this is a big loss for scumbag regulator Gary Gensler. we know they want to put everything in that securities buckets, airdrops, secondary market sales, and they're trying to throw as much stuff against the wall to see what sticks. But this ruling, in conjunction with the Ripple lawsuit ruling saying secondary market sales are not securities transactions, is a big win. You're getting more case law that the industry can use to fight back against scumbag regulator Gary Gensler and his buffoons at the SEC. And I'm not calling everybody there a buffoon. A director of Gerbir Grewal, who has no relation to Paul Grewal, he's another buffoon. And then you got the other Democrat commissioners, who, those two that voted against the Bitcoin spot ETF, right? This excludes Commissioner Hester Parson, Mark Ueda. And of course, the biggest buffoon is Gary Gensler. So, folks, we see the courts are not putting up with the lies, the hypocrisy, and all the unlawful activities of the SEC. Let me remind you, in the death box case, the SEC got sanctioned. They lied to the courts, right? And you should just read what the judge had to say. It's incredible. In the Bitcoin ETF case with Grayscale, the SEC got called arbitrary and capricious. In the Ripple lawsuit, Judge Sarah Netburn said the SEC lacks faithful allegiance to the law. Folks, these are not my words. They're from the courts, from the judges. So this is big. It should be making more headlines, but it's another loss for Gary Gensler, even though there's no direct correlation or ties here. But I believe that these three random jokers didn't just wake up and say, let's sue Coinbase because they're selling unregistered securities, right? They were probably plants, guys. And it wouldn't surprise me if Gary Gensler and the SEC and these folks are doing that. So big win here. We're winning in the courts, guys. And that's unfortunately the way we have to do it right now because Congress has failed to act. And Gary Gensler and the SEC are running amok here. So big news, in my opinion. Once again, the rest of the industry can cite this case law and say, hey, what are you guys doing? What is this, right? Kraken can then go use this in their case and much more. So I love it. Remember, LegaleX out of Texas, that small crypto exchange, which partnered with an advocacy group, is suing the SEC, proactively suing the SEC. And I recently interviewed from the DeFi Education Fund, Amanda Tuminelli, who's the chief legal officer. If you haven't seen that interview, check it out, guys. Lots of important facts and nuggets in there. They have submitted an amicus brief in the U.S. versus Storm, arguing the court should not validate the government's unprecedented damaging theory of criminal liability for software developers. So this has to do more with Tornado Cash. But they also are proactively suing the SEC over crypto airdrops. And that's what I discussed with Amanda in the interview. It's for the BEBA collection. I haven't heard of them. They have a token and they want to do an airdrop, but they know the SEC is trying to say airdrops are securities, but there's no investment contract. If you don't pay for that token and it's just airdrop to you, how is that a security, right? So it's asinine what the SEC is trying to do. So I love that advocacy groups like this are going on the offensive, not waiting to get a Wells notice, waiting to get a lawsuit from the SEC. They are suing the SEC. And Amanda and I discussed this in the interview. So this is really great. Another big loss for scumbag regulator Gary Gensler. Now, guys, we've been seeing a plethora of meme coins pop up for everything. Cats, dogs, Biden, Trump, Elizabeth Warren, Gary Gensler, right? It's crazy. It's insane speculation and meme culture put on the blockchain. Well, the folks at Blackrock did a great article here that stated if elections were settled with meme coins, Biden would win by a landslide. So it's interesting, once again, culture on the blockchain, and it could be an indicator of how people are feeling, whether it be negative, positive, or whatever it may be. And I find this fascinating, folks. The future is going to be wild. Now, obviously, a lot of this does need to be regulated. I'm not saying it needs to be shut down or killed. I don't believe that, right? We need to have the free market, but we need to make sure people don't get rugged, right? That if they do launch projects, it's legit. Like, I don't have a problem with you launching a meme coin necessarily, but rather what's happening with that meme coin? What are the tokenomics? And are you just doing it to rug people? Because if you look at Dogecoin has been around for a long time. I could honestly say that's a solid meme coin. It's in the top 10. It's survived bear markets and it's used as proof of work, right? So there's a nuance there, is what I'm trying to say. So the article says here, they say art reflects culture. If that's true, then meme coins reflect the baser instincts: greed, hunger, self-preservation, and human urge to buy the bottom to sell the top. So too then must meme coins invoking political figures gauge sentiment for their avatars ahead of the US presidential election later this year. There's only 4 tokens in the politify category with measurable market caps, according to CoinGecko. Meme coins like Joe Biden and MAGA, which is Trump, make up 99.7% of that value, while others include a ragtag bunch of spin-off Trump tokens and one for Argentina's fiery new president, Javier Milei. Neither Republican or Democrats have confirmed nominees, but incumbent Joe Biden and former US President Donald Trump are widely presumed to be running against each other again in November. Biden launched on Solana less than 1 month ago and is already valued at twice Trump's cap, $487 million to Trump's $222 million. Trump was first issued on Ethereum in late August last year. Now, guys, I'm not endorsing this or trying to say you should go and invest in it. I'm just helping you to understand what's happening in the landscape and the token economy we're headed to, and the change in culture when it comes to investing and how this may impact things in the future, like politics and much more. So it's fascinating. I think studies are going to be done about these things. And we'll see where these tokens actually go. And for the record, I don't hold any of these. I got a little bit of Dogecoin, but I don't hold any meme coins. But I'm not hating. If you know what you're doing and you've done your research and you're making money off of it, then God bless. More power to you. Because who am I to say you shouldn't invest in this or you shouldn't do that? What I do try to give you guys, though, is the facts, right? Like what's happening, who got rugged, letting you know the risk level. Like, for example, meme coins, I believe, have the highest risk level in the market. Investing on its own obviously has risks. It comes inherently with risk. But when we put it all in the category of investing, and we look at the risk level, let's be honest, meme stocks, meme coins have high risk level. It's like walking into the casino, throwing in a number. You might win, but you might get rugged or lose, right? So just understand what's at play here. That's all I want you guys to understand the risk. And if you choose to take that risk, that's you're right, of course, right, folks? So just an FYI on this. All right, folks, be sure to check out our sponsor, Uphold, which is a great place to buy crypto. I've been using Uphold since 2018. You can also trade precious metals on this platform, such as gold, silver, palladium, and platinum. Uphold has Bitcoin and all the top altcoins. You can go check them out. They have a great app. They also have proof of reserves, so they're not trying to commingle your funds or lend it out. You can go review their transparency reports. So I trust this platform. Once again, I've been using it for years. If you'd like to learn more, visit the link in the description. Folks, hit that subscribe button, hit the 5-star rating. Don't forget to follow us on all social platforms: Instagram, TikTok, Facebook, LinkedIn, X, and sign up for our free email newsletter as well. Thank you for watching and listening, and I'll talk to you all later.